Welcome to the latest Astute Market Overview, a chance for us to provide an overview of what we've been watching in markets. In the short period of time since our last update, it's been a busy time for celebrations. Shrove Tuesday celebrations and the Carnival of Brazil ahead of the start of Lent, Valentine's Day, National Day in Japan, the turn of Chinese New Year and the President's Day in the US. Following all of the festivities, many key markets sat slightly higher, having been buffeted by data releases along the way. In this overview, we'll cover the outlook for China, UK economic growth, and UK and US inflation. Let's start with China, a region which we watch closely. In reaction to investors' ongoing disenchantment with the region, this week security regulators in China worked to allay fears and stabilise the market by explaining that they will heed advice and criticism given by investors. In recent years, there have been high hopes for investment in Chinese companies, as strict lockdowns would surely lead to a booming reopening, domestic consumers with money to burn. However, this reopening wasn't as strong as investors had hoped, and since government interference in the stock markets has unnerved investors, sending signals to foreign investors that the government can intervene in markets at any time. This is an area that we are watching closely. We believe China is a region with potential, but what will be the catalyst to make that happen? Turning to the UK, Consumer Prices Index inflation, or CPI, revealed that prices rose by 4% in January 2024 versus January 2023, which is the same rate as the increase in December 2023 versus December 2022, and double the 2% target. This was in the news headlines for merely a day, overshadowed by the release of gross domestic product data, or GDP, exposing that the UK economy entered a technical recession in the second half of the year. This was due to 2 consecutive quarters of negative GDP growth. That was a 0.1% fall in the third quarter of last year and a 0.3% fall in the final quarter of last year. We've been chewing over the prospect of a recession in our commentaries for a while now, and whether it would be needed to bring down inflation, and now estimates have confirmed a recession, subject to revision. It's key to point out that whilst the data point to a recession, they point to a weak recession, something that the Governor of the Bank of England, Andrew Bailey, made very clear in recent interviews. This is a fall in growth, but by a very small amount. When compared to other major economies, UK inflation isn't coming down as fast, and the economy isn't faring as well. Whilst these two elements aren't strictly under the control of the Prime Minister Rishi Sunak, he did make economic growth one of his 5 pledges at the start of 2023, alongside halving inflation by the end of 2023, which has been achieved. Although the government aren't in control of the central bank's decision, they do provide a remit for the Bank of England, laying out specific responsibilities. We'll be listening to what the Chancellor of the Exchequer has to say about these matters when he takes to the dispatch box to deliver the spring budget in 2 weeks' time, ahead of this year's general election. And finally, in the US, Consumer Prices Index inflation, or CPI, appeared to reveal the taming of inflation wasn't as cut and dried as markets had hoped. At 3.1%, the higher than expected release sent markets tumbling on the day. However, the Federal Reserve, who target inflation, prefer to watch the Personal Consumption Expenditures Price Index, or PCE index, as a measure, which will be released next week. Coming up domestically, we will have 2 weeks of leaks and speculation ahead of the spring budget, which we'll be watching closely. See you next time.